Hello, everybody. Welcome to the Cafe of Knowledge. So glad that y'all can be with us today. Please hit like and subscribe, please. But anyway, we're going to get right into it. Everyone know last week we talked about the registers and the bartenders and everything like that the week before last. Then last week we just talked about how to track your inventory, okay? And that was chapter 3. So today we're doing chapter 4, and chapter 4 is understanding the accounts receivables, accounts payables, and also the deception of vendors, and basically the dishonesty of vendors and your delivery people, whether it's he or she or whatever, but it does have dishonesty inside of it. Okay, so we're going to kick it off and go right into that. But now a lot of you who's already followed all the videos from week 1 through week 8 and all of these videos here up into chapter 4 kind of already know this, but I want to drill this inside of everyone's head so that you will have a good understanding. Because when we was doing inventory counts, we was touching on all of this, but we wasn't getting into the depths of it. You know, we didn't go deep into it. So this is what these chapters are. They are going deep inside everything that we kind of talked about. And then once we touch on all of these, then we will go into, in a couple of more weeks, the budgeting side of it. And the budgeting side is not only you budgeting for the company, it also helps you budget for your personal needs, okay? For your personal income and how you run your life with your money, and budgeting where that you know how to budget the best way for the finances that you have. Okay, so it all's applied the same way. The same way that you budget a company will be the same way you budget your own money for your personal finances. Okay, it all works the same way. It's no different. It's just that you'll be dealing with the company. You're dealing with a lot more that you have to budget with, and a lot more money that you have to put aside and budget with, but it's all the same way. Okay, so let's get right into chapter 4, and I'm so glad that all of you are joining. Like I said, this Cafe of Knowledge is showing you everything that is valuable to you in the work field. Wherever you go, you can apply this into just about any company. At least 90% of companies you can apply this knowledge to make more money, have more finance money in your pocket. You know, you can get more things, buy more things, live a little bit better, however you choose to do. So whoever is watching this, the viewers, the subscribers, that lets us know that you do want a better career, or you want to improve your career. And I'm not worried about you doing it. If you stay tuned and you know you went through week 1 through week 8, you already gonna have that. So that we already know. Okay, so let's go right on into chapter 4, and that's understanding the accounts receivables and accounts payables. Then we will talk about the deception, dishonesty of some of these vendors and some truck drivers. Okay, so now let's just go into accounts receivable. Okay, accounts receivable, sometimes they abbreviate accounts receivable as AR. It'd be in parentheses, capital A, capital R. So that's the short term for accounts receivable, AR. So if somebody come to you on the job or your place of business, and then they say, hey, do you have ARs on file? And you say, oh yeah, I have that. That's accounts receivables. Okay, that means they want to see your bills from your vendor. You know, the things that you order is basically a bill that they have. Okay, so accounts receivable is the balance of money due or owed to a business for goods or service delivered, used but not yet paid. Okay? That's what accounts receivable is. It means that when you get things from a vendor, but you haven't paid for it yet. You're using their item, but you haven't paid for it yet. Okay? It's money owed to the people that gave it to you. Okay? So that's what accounts receivable is. Okay? You will also find accounts receivable on a balance sheet. We haven't got to balance sheet yet because the balance sheet is part of your budgeting process. Okay? But when we get to balance sheets, then you will see how we put the accounts receivables onto that. But that's what accounts receivables is. It's money that you owe to a vendor for their product that you're using, but you haven't paid for it yet. Okay? So they give you a bill, and that's accounts receivable. Okay? Accounts payable, remember we talked about that in the previous weeks. Accounts payable, payments made to the vendor or customer that is owed. So the accounts receivable is when they give you the bills and they give you the product along with a bill, and you know that you have to pay that bill by the end of the month, because most bills to a vendor is paid once a month. Okay? And so that's accounts receivable. But then at the end of the month, when you get ready to pay that vendor and you write a check for whatever it is that you purchased for them and the check that you owe them the money for, that's accounts payable, meaning that you paid for it. Okay? Now, you have to verify when you're doing accounts payable. First, you look at the invoice and you verify that everything that you got and the amount, and then you pay it. And you remember when we talked a couple of weeks ago, some of the items was missing off the invoice, and that person who checked that truck and invoice in scratched out what they didn't get. They adjusted the price, and then they signed it. So when you run across an invoice like that, when you're getting ready to pay it, make sure that that deduction is in there and you're taking away what you didn't get, and then you write that check. Okay, so that's what that means, that when you're looking at an invoice and you're getting ready to pay those vendors or the customer for it, you have to make sure that you have to look over that invoice and make sure that what you're paying for is what you're supposed to be paying for, and if it's any deductions, you take that deduction out of there and then you pay for it. Okay, so that's what that is. You just have to make sure that you pay your vendors in a timely manner. Okay, in an efficient manner. You have to make sure that if you pay your vendor every 1st of the month or every 30th of the month, you make sure that that vendor gets paid on those days. You don't want to be late paying your vendors, because then your vendors is not going to want to deliver you anything because they feel like you're not paying them and you're not trustworthy. So when the person who is paying accounts receivables and accounts payables, make sure you paying these things on time. And most companies do make sure that they pay their vendors on time. If you're supposed to pay them on the 1st, make sure they get their check on the 1st. If you're supposed to pay them on the 30th, you make sure they get their check on the 30th. Okay? Or it's in the mail headed to them on those days. Okay? So just make sure, because vendors do not like to deal with companies or small businesses. And if you're a business owner and you're buying your products and they letting you go a whole month without paying them, and then when it's time for you to pay them, you need to pay them, because that business has already went a whole month And they've been steady giving you items and supply. They've been steady dropping off deliveries to you all month long. You're getting your stuff on time. They need to get paid on time because they also have a business to run exactly how you do. Okay, so just keep that in mind. So right now, anyone who has been watching this video, y'all can, excuse me, y'all can always apply for accounts receivable job or accounts payable job. Okay? Excuse me, y'all. I just had some peppermints. But anyway, y'all can apply for these jobs. And it'll be no problem with that at all. Okay? You now know how to do accounts payable, accounts receivable. Now, there are many business and companies and corporations that you can become now a shift leader, manager, work in the corporate office because you know all about accounts receivables and accounts payables. So you should have no problem within that at all. So you can go and you can look up and try to get accounts receivables, accounts payable job, and you should be able to get that. Now, you know, we already talked about always check your invoices for the wrong prices, for any corrections and all that stuff. Okay? Be sure, make sure all items arrived or checked. We talked about checking the truck drivers and checking that your items are not damaged when they come in from the vendor and all that good stuff. Okay? Now, you have a thing that's called bills payable. Bills payable, now you know we just went over accounts receivable. We just went over accounts payable. Then you have a thing called bills payable. Bills payable is the actual invoice the vendor sends you as a request for payment. Now, you know when your invoices come in as the truck driver deliver you, you signing your invoice and then you putting it inside the computer or you putting it inside of your files. Now, all of those invoices, probably right before you get ready to pay that vendor, it ain't no probably, they will. Right before you get ready to pay the vendor, probably about 4 days before you normally cut the check, write the check to that vendor will send you bills payable letter, and it'll tell you exactly what they say you owe them to, which should match with the invoices that you have that you're getting ready to pay as well. So they'll send you a thing saying bills payable. They'll send you just a short copy that says, on this day we sent you this for a total of this. On this day we sent you this on a total of this. This day we sent you this for a total of this. And it should match the invoices that you already have and getting ready to pay. Their amount and your amount for the invoices you're getting ready to pay for that month should match. If it doesn't match and it's a couple of dollars off or a couple of dollars short or a couple of dollars more, you have to call that vendor and say, hey, you just sent us what we owe you, but all of our invoice say we owe you this. But your thing says we owe you this. And then y'all would talk and see where the problem is and where the correction should be. Then you cut them that check. But that little bill that's really a summary of what they sent you for that month and the money that you owe. You know, you just open it up. It's just like a bill. You open it up and it has a summary of everything that they sent you for that month and how much money you owe them. And your invoice should say the same that you're getting ready to pay. Okay, so that's how you do that. And then if it's off, you call them people and then the vendor, and then y'all talk about it, see where the correction needs to be, and then you pay accordingly. Okay, so that's bills payable. That's just a short summary bill that tells you exactly what you owe them for that month. Okay? Now, you know everything about that, and like I said, you can now apply for some type of accounts receivable and accounts payable job, because believe me, they have, you look it up, they have jobs like that for openings, and you know how to accounts receivables, you know how to do that, accounts payables, you know how to do that, and you know what a bill payment is. Okay, so you know what all that is. The bills payable, you know what that is as well. So you should have no problem with doing that. So all of these things that we have been talking about, you can look up and get a job field in that. You can get a job field in inventory, which includes everything we're talking about, or you can get a job for accounts payable. You want to be accounts payable person, accounts receivable person, so that you know how to do all that. And that's sometimes all a company hire for. They just want somebody to receive the bills, check the bills, pay the bills, and make sure that they're paying the right amount, and that what they're getting in is what they received. That's all that is. Okay, so now let's talk about the deception of let's also talk about this first. Know that when your delivery comes in, you always check it, because damaged items can't be sold. Okay? Make sure you check everything that comes in off that delivery truck. Make sure you look at your product, because if a product is bent, damaged, leaking, you can't sell those and you can't use them. So you have to send that stuff back. So you just make sure, because if you don't check it and you sign off on it, we always talked about, it's nothing you can do. You just have to take that loss. Okay? So just make sure that you do that, because a company can't make profit off of damaged goods. They can't make any money off of it. They can't make any profit off of it. Okay? And once you do that and you take off on that invoice, then you're no longer responsible. You can send that damaged items back, and you're not responsible for it, and you take that price off your invoice, and then that's it. And sometimes they'll probably send you some more good ones the next day. They'll say, oh, we sorry, that's damaged or whatever, and then the next day they'll drop you off another replacement that is good. Okay, so just make sure that you know that. Okay, another thing we're going to talk about now, we're going to talk about every item that you enter into the computer system must be accurate, and it must match. We already talked about that. Your vendor's invoice and what you have inside of your computer should match. If it's not, we already talked about, you got to go line by line until you find what's wrong. And once you find if it's the price that you put in wrong, or is it how many you have put in wrong, you have to go through each line until you find how come the invoice and the computer amount is not matching up. Okay? And it's somewhere in there that the price is either wrong, or you put in that you really, like, say you had 5 but you made a mistake and put 8. Your hand hit the 8, and it'll show the price difference will be different. So you have to make sure that you find that mistake so they will balance out. That's how you balance accounts receivables. Okay? So you know how to do that. Now let's talk about the deception of some vendors and some truck drivers. So I do know that some vendors, they will say that you pay $5 for cucumbers. Okay? Every time you always buy a bag of cucumbers, you do $5. And then sometimes you can look at the invoice. Your cucumbers are coming in, and you look at the invoice and say those cucumbers went up to $10. And then you say, ooh, we used to pay $5. I don't know if I want to pay $10 for these cucumbers. Now, if you just really need the cucumbers, yes, you will go ahead on and probably use them. But you will make sure you call that vendor and ask them, how come it went up half, it just went up a whole $5, because you was paying $5 for it. Now you're paying $10 for it. Ask them, why did it go up? You have to question vendors, because if you don't, vendors will jack the prices up on you just about every week or every 2 weeks. You will find yourself paying too much money for an item. And if that's the case, we talked about that. You can always find other vendors, you just have to scout, that can sell that exact same product cheaper. Okay, because that's the name of the game. You're trying to buy things cheaper so you can make money off of it. Okay, you don't need your prices to be jacking up, just going up every week and every 2 weeks. They just going up, and they're going up tremendously. But if you don't catch it, some vendors are slick. That's what I said, about dishonesty. They might not be meaning to do it, and then again, they could be meaning to do it. But the thing is, it's wrong to do. Because when you make your order to these vendors should tell you then, you say, okay, I want a 50-pound bag of cucumbers. They're supposed to say, okay, your cucumbers are, now they have went up $4 or $5. And then you could say at that point, oh no, I don't want those. And then it gives you a chance to find someone else that probably have cucumbers cheaper than that. But most vendors won't tell you that they went up. They'll wait until you see the invoice when the truck driver gives it to you, and then you'll see that price jack up. Okay? And then they know you're probably in a stuck situation, because you probably need those cucumbers and you're not going to send them back, so you're going to pay that high price for them. Yeah, I might pay that high price for them at that moment because my store needs those cucumbers. But I could tell you what, once I get those jacked high price cucumbers, you won't have to worry about me getting them no more, because I'm finna jump on some type of paperwork and find and do some searching and find somebody who could sell me some cucumbers cheaper than that. Okay? And then you can also call that vendor and ask them, why did they go up? Okay? And how long would they prices be up? And maybe sometimes if it's a disaster in the area or the city, say that they had a hurricane, or they had a tornado, or they had a bad snowstorm, or they had something that kind of destroyed the crops, and now they have to go up on their crops. That's kind of understandable, because then that kind of everybody that you call, probably their cucumbers are going to be high. But it's nothing wrong with checking it out anyway and calling these different people to see if that's in the same price range. Okay? It's kind of understandable then. But if it's nothing going on and no disaster happened or anything like that, and they just jacking and jacking, going up on the price, no. You need to find and search for someone who you can get it from cheaper. Okay, so I had to just break that down, and most times vendors do know what they're doing. They're just trying to see if they can get away with it. Okay, now on the back end side of a dishonest truck driver, this is what I'm telling you guys, that we already talked about this previously, and I don't want to go into it. And if you're just joining us and you're new to our show and new to our program, you might want to go back and refer to our week 1 through week 8, because we talk about truck drivers all the time, and we talk about how to check items all the time that comes in your place of business. You have to check those trucks and those items when they come in. That is so important, because that affects your inventory. Period. Okay, so now I always concentrate and always tell you guys that you have to check that truck. And if you're supposed to have 5 milks, it need to be 5 milks there. And you need to check those 5 milks and see if they are damaged. You have to look at your invoice and make sure that what you ordered first is on the invoice. Because sometimes vendors will leave some items off. Like you say, I ordered oranges and didn't any come in. Now you have to call the vendor. Sometimes the vendor will put on that invoice that out of oranges, and then they have a price 0 because they was out of it and they couldn't send you any. Okay, well, you know that. But then it's sometimes that you ordered that item and it's just not on the truck, or on that, it's not on the truck and it's not on your invoice. Okay, so it's stuff like that you have to make sure you check and make sure you have everything that you ordered did come in. And what did come in is the right amount, and it's not damaged and it's not spoiled, or something's not, make sure that it's correct. Okay, now once you do that, a truck driver knows that you are the type, when they come to your store, you are the type that checks everything. You have some management teams or some people who checks in the truck. They just let the truck driver come in and they hurry up and rush and do something else, and they'll go back in the office and they'll do what they have to do, whatever, and then the truck driver have to go find them and tell them, okay, here you go. And then the manager say, oh, okay, you finished delivering everything? Truck driver say, yeah. And that manager assign it inside of the office or inside of the building and never did go back and check to see if the truck driver gave him everything. Okay? Most of the times that happens when people are very busy and your management team is very busy, or the person who's supposed to check in the truck is very busy, and they done got to know the truck driver a little bit, so they kind of trust the truck driver that the truck driver's going to bring them everything they supposed to bring them. No, it doesn't happen like that. You have to be standing there at all times when he is dropping off your product and making sure he's dropping. Every time he drops something off, you check the invoice. You check the item on the invoice. Okay, 5 milks. Okay, there you go. And then you check it. Okay, 10 sugars. 1, 2, 3, 4, 5, 6. Okay, 10 sugars. Yep, that's it. Check it. That's how it goes. Until you check everything off that invoice, and then you know for a fact everything is there, then you sign it. But sometimes truck drivers will come at the busiest time of the day, try to drop you off some things, and everybody in the store is going right to left, and they running all over the store trying to take care this busy atmosphere they have going on inside the store, and they leave the truck driver just dropping off stuff. Now let me tell you what happens when you do that, and you will be very, very affected by that. Is sometimes, this is a true story, y'all, true story. There are some, I know a story about a truck driver who knew 3 stores. They knew 3 stores that management or whoever's supposed to be checking in the truck never checks it in. Never. They just depend on the truck driver to do it. And this truck driver knew that it was at least 3 stores that he could just go in and nobody ever checks what he's supposed to bring them. Nobody ever checks it. He knows this. And so those 3 stores, every time he goes in those stores, he shorts them. So if they ordered 50 hamburgers package, he would give them probably 20 and he keep 30. Then if he was supposed to give them 15 or 20 milks, he would give them 10 and he keeps 10. And then if he was supposed to give them, say, 50 bags of French fries, he'll give them 25, he'll keep 25. And then he will give them the invoice. He'll go through the store or wherever and look for the management team, because remind you, the management team ain't back there checking nothing. They don't even know what he done put in there. And he knows this. So he goes looking for them somewhere around the store, and he said, oh, here you go, I'm finished delivering. They said, oh, okay. And they go ahead on and sign their name. And they give it to him. And then he takes the invoice, he rips it off, gives them their copy, he takes his copy, because see, when they sign it, they are saying everything is there. So that takes all the responsibility off of him, because once that person signs it, it takes all the responsibility off of him. So then he goes and he gets in his truck. Now he got half of their stuff still in his truck, and he do the second store like that he go to, that he knows the managers don't check to make sure that he bought everything in. And then he goes to the third store like that, and he do the same exact thing to the second store and the third store that he did to the first store. He keeps half of their stuff, because ain't nobody checking it. Nobody is checking it. And now when he gets ready to clock out, because it's the end of his day, he will go in his neighborhood or to other neighborhoods, and he will sell the things he did not give the stores their products. So those 10 milks that he kept, and those probably 30 packages of hamburger meat that he kept, and probably about 50 loaves of bread that he kept, he would take all that, because he's not responsible for it no more, because see, those managers or shift leaders or whoever it is that checks in the truck signed and said they got everything. So he ain't worried about it no more. Now he's finna take all that stuff and go somewhere in a neighborhood where people he know, or to his family or around or somewhere, and he sells it to them. So now he making money off y'all product. Is that right? No. Dishonest truck driver? Yes. Very dishonest. Very dishonest truck driver. But that's what happens. That's what they do, and they make extra money. So now he got 20, probably 30 hamburger meats in his truck that really belongs to the first store, but the first store didn't get it. He still got it, because they didn't check it. And now he goes to his neighborhood, and he'll sell each one of those packets for about $5 a piece. He'll go in the neighborhood, hey, y'all, I got hamburger meat. I got a pack. You can get this whole big old pack for $5. And everybody, okay. And then you see people coming out surrounding the truck, because they buying stuff from the truck driver. Now the truck driver done made him about $500 off of the company's food that they didn't get. Now when they get ready to do inventory, all that's going to show up, because the count's going to say, you missing this, you missing 30 hamburgers, you missing this, that. Now the management team is running around the store thinking somebody stole it, or they don't know what happened. But when you're missing that many things at one time like that, it automatically kind of clicks to the management team that this stuff couldn't have came off the truck. It couldn't have came off the truck. And sometimes you just have some management teams that the truck driver get over on them probably about 6 months straight like that. Only thing the management team is saying, man, we sure is missing a lot of hamburger meat every week. Every week we missing hamburger meat. Every week we missing bread. Every week we missing, and they thinking that the employees are stealing it, and they thinking that something or the customers are stealing it, and in all reality, it never came off the truck, because they didn't check it. It's not until way down the line that most companies realize we're going to have to start checking this truck more closely and making sure that we getting our products, because we've been missing a lot of products here lately. That's what it is. So that's why I tell all my people to make sure that you are checking the truck seeing. You don't leave. When he give you that invoice, he said, here you go, and he start pulling all your items down the ramp off his truck into your store, you have to count it. Okay, hamburger meat, I'm supposed to have 30. 1, 2, 3, 4, 5. And you got to make sure you get 30. You got 29? You say, hey, I got 29 hamburgers. I'm missing one. And I'm going to take it off the invoice if you can't find it. And that truck driver, I done seen that. And the truck driver will say, oh, I don't know. What you say? It's only 29. And you say, yep, count it. It's only 29. I'm supposed to have 30. 30 is on this invoice. I'm supposed to have 30. I only got 29. So I take it off the invoice if you can't find it. And then probably about 5 minutes later, he'd be like, oh, here it go. It was back off in the wrong spot. Here it go. And he'll give it to you. Yeah, I bet it was in the wrong spot. Probably was in the wrong spot, but then again, it's a good chance that you were going to probably sell my little hamburger meat. And then I was going to be short, and it was going to mess up my inventory, and mess up my budget, and mess up my profits, and mess up my income. So you have to make sure you check these vendors. And that's a true story that I wanted to tell you, because this is how important it is that when you are checking in a truck off those invoices, you have to make sure you are standing there, and you have to make sure that everything that invoice say that you're supposed to have, you have it. And that way, if it don't come off, you could take it off right then, take the price off, and then deduct the price, and then you have the truck driver sign it, and then you sign it, and you send it back with him. That way now, it's between him and his company. Because when he gets back at the end of the day to his job, his company going to say, hey, we did put 30 hamburger meats on there. So why is it that you are missing one? Because they done took the price off. See, that store ain't responsible for it no more. Now, who responsible for it now is the truck driver and the company. That's their loss now. It's not our loss. But if you don't check it, it's going to be your loss and not their loss. Okay? So when he take that paper that you marked off that he didn't bring you this and it didn't come off that truck, and he handed it back to his boss at that company, at that vendor company, that's between him and them. Him and them. It's not have nothing to do with you. Okay? So that's the purpose of making sure. Let them take that loss, not you and your company or you and your business. Don't let that affect you, because you need to be checking everything that comes in off that truck. And if it's not there, take it off, chop, and take away that price, and then you hand them the invoice. You make sure he sign it and you sign it, because by him signing it, he's verifying that you're right, it didn't come off the truck. Okay? So that's how that's done. So that was a true story, and that's why I wanted you guys to know how important it is. And most of these truck drivers will come during the busiest parts of the day. They'll come when they know the store is busy, and they know that you probably can't check your invoice, and you ain't got time to sit there and count everything that comes off the truck. You tell them you're going to have to just sit here and wait until we slow down. And that's why we said, some companies say no deliveries. They have it on the door. No deliveries between 2 and 4. Or no deliveries between 11 and 2. That's why. Because because truck drivers will catch them on a busy time and get over on them. You know, and they can't watch the truck drivers and run their store at the same time in this busy time. So they make the truck drivers come during a slow period where it's not a whole lot going on, and that way one of the managers can take their full undivided attention to that truck driver, to those items, to that invoice, and make sure everything is correct. Okay? So that's all I have for today. Next week, we will be on chapter 5. And chapter 5, we're going to talk about first in, first out. That means that things that come in first out, and things that come in last out. y'all haven't, it's certain items and certain job fields that used whatever come in first goes out first, or whatever comes in last goes out last. It's some jobs that's how they require things go, and we're going to talk about that next week. That's chapter 5. We're going to talk about that next week, about the first in, first out, last in, last out. Okay, so that's all I have for today, and I appreciate it, and I hope y'all got a lot out of that. And I'm so glad that all of you are done got this far along in the program, that I know for a fact you will be able to have a much better career, a successful career, make more money. And that's what this show is all about. Just like I said, it's free of charge. Please, please hit like and subscribe. If you know anyone that might need this knowledge, or might need a better job, or they looking for a job, tell them to tune in to the Cafe of Knowledge, and tell them to make sure they like and subscribe. Okay, so that's all I have for today, and I'll see y'all next week. Bye-bye. Y'all have a nice day.